Hello everyone, Arunava this side. So welcome to my channel. Today we are going to talk about some narrow concepts of microcredit, the meaning, features, limitations, and risks. In today's session, we will explore what microcredit actually means, why it became popular in financial inclusion, and most importantly, why it is considered a narrow concept compared to broad financial services. Many people think microcredit alone can solve poverty, but is that really true? Through this presentation, we will understand both the strengths and the limitations of microcredit. So let's begin by understanding some basic concepts. Microcredit refers to providing small loans to people who usually cannot access traditional banking services. These borrowers often do not have formal income proof, assets, or credit history. For example, imagine a small street vendor who wants to buy more products to sell but cannot get a bank loan. Microcredit institutions step in to provide small amounts of money so that person can grow their businesses. Un Unlike traditional loans, microcredit focus more on opportunity rather than financial background. It helps people start small economic activities and improve their income level. This idea became popular because it gave financially excluded individuals a chance to participate in the economy. Now let's talk about the people microcredit serves. The main target group includes financially excluded individuals, small traders, rural workers, daily earners, farmers, and members of self-help groups. These are people who may be hardworking and skilled but lack access to formal banking. The goal of microcredit is not just lending money. It is to encourage self-employment and reduce poverty at the grassroots levels. For example, a woman in a self-help group may use a micro loan to start a tailoring business. Over time, that small loan can help her generate regular income and support her family. So microcredit plays a very social as well as an economic role also. The core idea behind microcredit is access to credit without traditional barriers. Loan amounts are usually small because they are meant for micro entrepreneurs. Another key feature is that these loans often do not require collateral. Instead of assets, lenders may rely on trust, group guarantees, or community relationships. Also, these loans are typically meant for productivity purpose, like starting a small shop, purchasing farming tools, or expanding a home-based business. The philosophy here is simple. Even a small amount of capital can create a big change if used properly. Now we reach the main topic. Why is microcredit called a narrow concept? It is considered narrow because it focused almost entirely on lending money. It does not cover the full range of financial needs that low income households have. People need more than just loans. They need ways to save money, protect themselves from risk, and plan for the future. Because microcredit offers only one service credit, it cannot provide completely financial security. This is why experts differentiate between microcredit and microfinance, where microfinance includes savings, insurance, and financial education along with loans. Let's look at what microcredit usually does not provide. First, savings facilities are often missing. Without savings, borrowers may not build a financial cushion or emergencies. Second, insurance products like health or crop insurance are generally not included. So if a borrower faces illness or natural disaster, they may struggle to repay loans. Third, there are limited investments or wealth building tools. Borrowers may grow their income, but they may not have structured ways to build long term assets. And finally, financial literacy or planning support may also be limited. These gaps show why microcredit alone cannot fully solve financial vulnerability. Even with limitations, offers many benefits. One major advantage is quick access to funds. Traditional bank loans can involve long process, but microcredit often reaches borrowers faster. It also encourages entrepreneurship. Many small businesses start with microloans, such as food stalls, handcrafts, or small farming activities. Another important benefit is financial inclusion. By bringing excluded population into the financial system, microcredit increase economic participation. Additionally, it stimulates local economics because small business create jobs and economic activity in rural and semi-urban areas. However, microcredit is not risk-free. One common problem is multiple borrowings. Some borrowers take loans from several lenders at once, which increase debt pressure. Another challenge is the absence of a safety net. Without savings or insurance, even a small financial shock can affect repayment ability. Low financial literacy is also an issue. If borrowers do not fully understand interest rates or payment terms, they may face financial stress. This risk highlights the importance of combining credit with education and support services. Now, one of the biggest concerns with microcredit is over-indebtedness. When borrowers rely only on loans without savings or insurance, they may enter a cycle of borrowing and repayment. Frequent borrowing combined with high repayment pressure can create financial instability. For example, if a small business faces slow sales or a farmer faces crop failure, repayment becomes difficult. Without additional support systems, borrowers may fall deeper into the debt. This this shows that access to credit alone is not enough. Balanced financial services are necessary. So to sum up To sum up this, microcredit plays an important role in uh, expanding access to credit and supporting small entrepreneurs. It helps people who were previously excluded from banking systems and encourages economic participations. However, on lending, it remains a narrow concept. For long-term financial stability, microcredit needs to evolve into a broader microfinance models that include savings, insurance, and financial education. The future of financial inclusion lies not just in provides loans, but in building complete financial ecosystems that support people through every stage of their economic journey. Thank you so much for watching this video.